I'm Tim Sustak, Chief Treasury Officer with Vizo Financial, and this is your FOMC update for the March 2025 meeting. At its latest meeting, the FOMC chose to maintain the target Fed funds range at a level of 4.25 to 4.5%, and they also maintained the rate on reserve balances at a level of 4.4%. The decision was unanimous and expected by those that follow the Fed. The post-meeting statement changed somewhat as the Fed dropped the language that indicated risks to achieving their inflation and employment goals were roughly in balance, and replaced that with the language, uncertainty around the economic outlook has increased. They also added language that indicated they intend to slow the pace of balance sheet runoff starting April 1st by lowering the monthly redemption cap on Treasury securities from $25 billion to $5 billion, while leaving the redemption cap on MBS securities the same at $35 billion per month. This will serve to alter the Fed's balance sheet composition to make it more Treasury heavy, which is where they want to be. March is also a month we'll receive updated Fed projections. Fed projections for 2025 GDP dropped from the December projection, and inflation projections rose. However, the dot plot estimate for 225 basis point cuts in 2025 remained the same. The affirmation that the Fed was in the same rate reduction path, even with all of the recent uncertainty and volatility, was very well received by the markets. We'll see what additional information Chair Powell had for us in his press conference after the break.
Don't want to be a statistic? Vizo Financial's social engineering testing services can make the difference. Our security experts will see just how well your credit union staff handle the same social engineering attempts real hackers would use. And with the results, you can tailor your security awareness training program for the better. Be a proponent of security awareness. Be ready for the risks, but don't be a statistic. Get Vizo Financial's social engineering testing services today.
Welcome back. Chair Powell gave his prepared remarks to start the press conference. He explained that though economic activity continued to expand at a solid pace in the fourth quarter of 2024, recent indications point to a moderation in consumer spending, with households and business surveys showing heightened uncertainty about the economic outlook. Further, he said labor market conditions remain solid, and inflation remains somewhat elevated in relation to the committee's 2% goal. He acknowledged that some near-term inflation measures have moved up, both market and survey base, with survey respondents naming tariffs as a driving factor. He also mentioned, though, that most measures of longer-term inflation expectations remain consistent with the committee's 2% goal. Concerning the new administration, Chair Powell indicated the significant policy changes being implemented result in a high level of uncertainty about the effect they will have, and the committee is focusing on separating the signal from the noise as the outlook evolves. He reiterated that the committee does not have to be in a hurry with respect to future monetary policy adjustments. In the question and answer section, Chair Powell answered a number of questions around tariffs, as well as why the committee still sees 2 rate cuts this year, given the change in their projections around growth and inflation. Regarding tariffs, he said it's tough to tell exactly how much they increase inflation versus other factors, but it's possible to look through tariff inflation if it is likely to be short-lived. Though he also said that further progress in inflation is likely to be delayed because of the current tariff policies. About the projected rate path and the dot plot, he indicated that given the high level of uncertainty about the outlook, and the fact that the increase in inflation projections and the decrease in the growth projection essentially cancel each other out, it made sense that the rate outlook stayed the same for 2025. He reiterated that given the high level of uncertainty, it makes sense for the committee to wait and see how everything works out. So, the Fed remains in wait-and-see mode, and who can blame them? There have been so many variables thrown in the mix that the only thing they can do is wait and see how those variables affect the economy and make their play from there. Hopefully the fog will clear relatively soon, so the FOMC can get back to steering the economy rather than guessing where the road goes. That's the FOMC update for March. Thanks for watching, and be well.